Welcome back to overnightaccountant.com. As always, or at least in this series, I'm your instructor, Brett Hirsch. We are still discussing realtors and reducing taxes. Now, in this section, we're still on the home office deduction. We're discussing the actual cost method. We kind of introduced that method in an earlier section. We also discussed how to calculate the square footage for indirect expenses. So we're moving on here to discuss direct and indirect expenses. Let's go over these a little bit to do some definitions. Okay, a direct expense on your home office. You should notice there's a little A beside it because it's reported in column A, which we'll show you several times during this course. So don't worry, you're going to see column A plenty of times. These are expenses that only impact the office area of your home office. Now, these expenses are not limited. And what I mean by that is you can deduct 100% of these expenses because they only impact the home office area. And as you can see, here's your column A. It's on your 8829 form. It's in part 2, figuring your allowable deduction. As you see, there they are, right there highlighted in yellow. Now, indirect expenses, on the other hand, that's column B, the one beside column A. These are expenses that are shared by the office and the entire house. These are the expenses that are limited to the area percentage of your home office, and that's the percentage of the total square footage your home office is relative to your house that we discussed in the last section. That's why we went through that calculation to show you how that worked. Now, a very common software mistake, if you're a do-it-yourselfer, which many of you probably are, even though I'm going to recommend a professional if you're doing actual expenses, as you'll see in a few moments, very common software mistake is mixing these two up. So as you're going through the software, make sure you understand what this definition is. Make sure you put your items in the correct column. If it's an indirect expense, when you're into that column, you still want to include 100% of those expenses, and then the software or the form itself will actually calculate the proper deduction. But I cannot tell you the number of times I've seen that in software done. Where someone does their own return, you look at the return the following year when they come to you because they just can't handle some of these deductions, and you really end up having to amend the return because they either claimed a ridiculous amount of expenses that they were entitled to, they put them in the wrong column, or they may have done the opposite, and a lot of times you miss many items that you can deduct on the 8829 that'll really help you reduce your taxes. Remember, every $100 of deductions you can find, or we're going to help you find in this course, is going to save you upwards of $50 in saved tax. So it's very important. We're going to help you out in this course. There's column B. There's where your indirect expenses go. That's on your 8829 part 2. Now let's go in. What is a direct expense? Again, there's your column A, as you've seen several times. That's really, I like that column. That's why we keep putting it on here. Now, these are relatively rare. Direct expenses are relatively rare for an office and home, and that's primarily because your office is in your home and has a lot of shared expenses, but not a whole lot of expenses that are directly attributed just to that particular room or even part of a room that you're using for your home office. So they are relatively rare, but we want to make you aware of some items that you can deduct so you don't miss any deductions if you can. A home equity loan interest, you could conceivably deduct that. However, this is very tough if you're only using that loan or only use that loan for your home office. Very rare. You can deduct that interest. In the direct section is relative to the indirect. However, you're going to have to prove your allocation. So if you have a home equity line that is used for other things other than just your home office, you're going to have a very hard time tracking or tracing that interest to the direct expense, so you may actually end up losing that deduction. Another one that might be common though, however, is painting your home office. That will be a direct expense if you only paint the home office. Also, if you have somebody else come in to paint it, maintenance of just the office itself. I don't know how big your office is, but if you have items going on in that office that need to be fixed or maintained, that would be an expense if it only impacts that area that's used for your home office. Relatively rare for an office in a home would be utilities only benefiting the office area. Where you would see this in many cases is usually where you have a separate structure on your property that's used for your home office. That's or sometimes with some professionals that we have, sometimes we actually meter their office area. Let's say if you're a physician or even an accountant in your home and you work from your home, you may even meter, have a separate electric meter and other items going in to that office area. So utilities only benefit the area would be a deduction. I want to make you aware that major renovations of the home office may require you to depreciate that that item. And this would be direct depreciation, would go in column A. However, these they're not really rare. I mean, we'll give you a couple of examples here. Let's say you have an unfinished an unfinished basement, and you decide to build out an office down there. So either the whole downstairs, maybe you turn into an office area, or maybe you just build out a room down there. You put walls up, put electricity to it. That would be a direct expense, but due to the fact it's a capital improvement, and also the fact that it's probably a substantial amount of money, you are going to have to depreciate that as direct depreciation. And once you open the 8829, if you're using software, you got to make sure that you're putting it in the right area and it's flowing to the right place in the return. So this can be can get a little messy. That's why we do recommend a professional. Let's say you do have a room, maybe it's not an unfinished basement, but another example would be new windows, new floors. You completely redo a room. You gut it out and completely redo it, floors, ceilings, everything. That would be a renovation. That would also be an example of an area that would be a direct expense, but you're going to have to depreciate. You probably couldn't write the whole thing off as you do it. Now, I want to remind you, we discussed this in the last section. I just want to illustrate this again or repeat it again because we don't want you missing any deductions. But many direct items that you associate with a home office can be reported directly on Schedule C. And these would include, let's say, for example, your desk, your filing cabinet, office supplies, items like that you may overlook. Just remember to track those expenses as we discussed in your record keeping. And those would really be reported on Schedule C. They're not going to go on your 8829. So they're not going to be limited, and we would just make sure you don't forget any of those. All right, let's go to indirect expenses now. These are going to be much more common because these are really shared expenses, and we're going to enter the total of those. You enter the total amounts. I've seen folks do this where they actually try to determine the percentage. They know if their office area is 5%, they actually end up entering into their software or on the 8829 5% of their various indirect expenses, and of course that results in a very, very minuscule deduction when they were entitled to a lot higher deduction. So you enter the total amounts in the indirect expense column. Be careful with your software, and I'll repeat this later also to make sure we're on the same page on this. Do not double count your interest and taxes on Schedule A. A couple of these items, including mortgage interest and real estate taxes, are also an itemized deduction. We'd rather see them on the 8829 if you're doing actual expenses, and it's higher than the simplified method would allow you because it's going to reduce your taxes more. It's going to also help you, for many of you, it's going to help you reduce your state taxes. So that's what we want to make sure, but make sure you don't double count them, because what happens here is you put it on the 8829 or in your software, you enter it, and the software should calculate it so it determines what percentage of that goes on 8829 or was deductible on 8829, and then it should carry the remainder over to Schedule A as an itemized deduction. That's mortgage interest and real estate taxes. Many times I've seen where folks enter it twice. They'll put it on the 8829 and then they go into the Schedule A and enter it again, and what happens is they really just double counted those two itemized deduction items, and the return's wrong. It's going to need to be amended, so just avoid that. Make sure. Now, some of these items are complex if you're running these items, and if these are circuits, I know you might be a do-it-yourselfer for your taxes. However, I want you to get a professional. If you have a casualty loss, these can be really complicated, and what that is basically, if you had a disaster, major theft in your home, wind damage, hurricane, some kind of major disaster in your home, make sure you get a professional, regardless of whether you have a home office or even if you have a business, because these can really be complex. And also there's another item, line 16, which we won't cover, which is excess mortgage interest. Relatively rare, very few are ever going to deal with that, but if you find yourself in that situation, get a professional. All right, mortgage interest. This is line 10 on the 8829. This is going to include mortgage interest that will be deductible on Schedule A. So if you're able to deduct on Schedule A, you can deduct it here. Follows the same basic rules. The only time it's really going to be limited on Schedule A is really circumstances where maybe your home's worth over $1 million and you can't deduct it, that sort of thing. And you might not itemize. So, but if it would be deductible on Schedule A, if you did itemize, you could deduct it here in mortgage interest Schedule A. Now remember, this also includes mortgage insurance premiums that would be deductible on Schedule A. Now this may be an area, if you have mortgage insurance, it should show up on your 1098 form you receive from the bank. Same with your mortgage interest. However, there may be more limits on mortgage insurance. So I don't know if you're doing it yourself. I don't know if the software is going to calculate the proper amount of mortgage insurance that can be deducted on the return, because they're generally limited by your income. So you might want to look on your Schedule A, see how much would be deducted, and then backtrack. If income over, threshold, I believe, is around 100 grand or so for the household, married, filing jointly. I don't memorize all that stuff, but if you're in that situation, make sure you're putting in the amount that will be deductible on Schedule A, and then remove from Schedule A so you're not double counting, as we said earlier. Okay, but there's a big thing here, big caveat to what I just told you. Do not include any interest on a loan that was not used to buy or substantially improve your property. So it's not an original mortgage or a loan you took out to improve your property. It does not go on the 8829. Only interest you can report on your 8829 is going to be interest that was used to basically help build the house, acquire the house, improve the house that is used, that includes your home office. So be very careful with that. For that reason, a lot of second mortgages will not qualify. A lot of times you get a home equity loan out, you use those things for all kinds of things. Oftentimes they're not used to substantially improve your home, or maybe a part of it is. If part of it is, you're going to have to be able to prove why that percentage of that interest or that part of that second mortgage or that HELOC is going to be deductible on Form 8829. Now, if you're in a situation like we saw, during the housing boom, where you got an 80% mortgage as your main mortgage, and then you got a 20% mortgage for your down payment, that of course was part of acquiring the property. That's a second mortgage that would qualify. Now, another thing I want to make you sure of here is you're using your do-it-yourself software. Don't double count the mortgage, as I said, but also make sure the remainder of whatever is not included. Let's say 5% of your home is used for your home office. You can deduct 5% of your mortgage interest and your property taxes on the 8829. Then 95% of it, whatever's left over, should automatically carry over as an itemized deduction on Schedule A. However, it doesn't always happen. So make sure your software is doing it properly if you're doing this yourself. You don't want to double count, but you don't want to lose a deduction either. So I want to make sure you're aware of that. And also, as I said a moment ago, that's the same deal with real estate taxes. Real estate taxes will follow the same rules as mortgage interest, which brings us to line 11. Now, your real estate taxes are deductible. Now, oftentimes these will be reported, because oftentimes you're going to pay these through your escrow, through your mortgage. So make sure you either have an escrow statement, or it may be on your mortgage statement. A lot of them will report your mortgage statement. That's usually common. Some of them don't. However, just don't forget that real estate taxes are deductible as part of your home office. It's on line 11. Paid through escrow. You may need to contact the company if they didn't give you a report and see what you paid last year. Oftentimes, for us, we can often find these items online. Different assessors' offices, these things, they actually carry them online, so you can look them up for your county. I don't know if they do that where you live or not, but just don't forget your real estate taxes. Here's one that's often forgotten, and that is line 17, insurance. Insurance on your home, often paid through escrow as well as real estate taxes, and it's not often reported on your 1098 form or the form you receive at the bank for tax reporting purposes. So you may either need to contact your insurance agent or look at your bill, look at your deck page, see what you paid, or it may be on an escrow statement if you receive it. Oftentimes people pitch those things, so you may not have it. Just don't forget it. Insurance on your house, what you pay for your house, is deductible. If it's included, if you have one bill that includes your auto in your house, which is kind of rare, make sure you only enter the amount that is for your home itself. Now, rent. Rent, if you're not a homeowner, of course you're not going to have taxes. You probably won't have taxes. You're not going to have mortgage insurance or mortgage interest. However, you're paying rent. That's on line 18. Excuse me. This is a very good deduction if you're renting. Oftentimes with renters, you're going to see them get a higher deduction on the home office deduction than someone who owns the property. This is true. Let's say you're paying $1,000 a month rent on a two-bedroom apartment, and one of those rooms is your home office, and it's only used for your home office, qualifies, and that's, say, 25% of your square footage of your apartment. That makes 25% of your rent deductible. You want to enter the full amount and let the program, the software deduct the proper amount. However, That could be a nice deduction. But see, with renters, oftentimes will actually do better with the actual home office expenses than a lot of folks who own a house. Now, repairs and maintenance, those are reported on line 19. We're going to discuss repairs and maintenance in a little more detail here because these can be very confusing. Often, there's two reasons for this. Oftentimes, folks deduct stuff that they really can't deduct. And oftentimes, you're doing repairs and maintenance to your house and you just forget about those items. You don't track them during the year and you're losing the deduction. So let's look over here what you need to track, what you don't, just try to help you out a little bit. Okay, a repair is something that benefits the entire house and keeps the home in good working order. Let's say like fixing the AC or your heat pump goes out and you have to fix it. That would be a repair and maintenance that would go in that column. Repairing a leak in the house, maybe a leaky roof, that helps the whole house. That would go in that column. Painting the entire home, if you included the home office as part of that, that would be a part of it. You may want to get, if you really want to maximize your deduction, make sure you're tracking everything. You may want to have your painter, if you hire somebody to paint it, give you a separate bill for that. That's a little over the top, but some of you guys really want to maximize your deduction. Have them give you a separate bill for the home office and then bill you separately for the rest of it. And that would make it actually a direct expense, not an indirect. So now major items, let's say you put in, instead of fixing the HVAC unit, you could get a new one. Now these items may need to be depreciated. Now it's a part of your home office, they're an indirect expense. You got a new HVAC unit. However, those need to be depreciated because of the value of them, the fact that they are really kind of a capital improvement, and plus just the sheer cost of them. Those need to be reported on Form 8829 as indirect depreciation. And they may actually even carry over to Schedule C depending on how your software is set up. If you set it up as a percentage of the business use, if 25% of your home is your office and you've got a $5,000 new HVAC unit, 25% of that depreciation is going to be allowed each year on either 8829 or the Schedule C. Make sure you enter it correctly into your software. See where it goes. Now, final note on repairs and maintenance is use common sense with some of these items, okay? If you renovate a whole new kitchen and you're using part of a guest bedroom for your home office, does that really benefit your home office? Is that really repair and maintenance that you would be able to deduct? Probably, maybe not. Also, like if you put a new deck on your house, does that really impact your home office? No, possibly not. Now, you could make the argument that increases the value of the home and therefore it should be deductible as part of your home office. However, I don't want you to push. I just want you to use common sense, because often items, if you look at court cases, oftentimes when they go over the top with these, those are denied. And a realtor is going to, you're a realtor. An auditor is going to make you prove it. So landscaping and yard maintenance, if it's not benefiting, it's benefiting it's part of your home or the area around your home, the land. However, that's usually not going to be a qualified expense. Now, snow removal, you may be able to argue, it might even be either an indirect expense or direct expense, depending on how you want to argue it. I would be safe and do it as an indirect expense, repair and maintenance, because it's benefiting the whole house and all the members. However, this would be an example of using common sense. You can't get your appointments, you can't get out of your home. So again, some of this stuff is a gray area. However, you could probably easily argue snow removal allows you to do your work and visit your clients, and it's necessary for you to make a living because that mileage is deductible since you have a home office. So there you go. Cleaning service. If you have someone coming in to clean your house, don't forget, if that includes the home office, that could be repair and maintenance, indirect expense. You get to deduct this percentage of that, enter the full amount, but a percentage of that will be deductible on your tax return. All right, let's move forward here. Utilities, that's going to be line 20. These are really expenses, shared expenses of the home that also benefit the office utilities. Here's a couple examples. Electricity, gas and heat, your security system. Don't forget your security system. You're paying upwards of $50 a month for that. That's $600 over the course of the year. That adds up. Now, one example here that's not deductible is your telephone line. Very rare anymore. A lot of us only have telephone lines really for our security system. However, if you only have it for your security system, that really doesn't matter. Your first phone line, this is ancient in the tax code, your first phone line going to your house is not deductible. We call it the first line rule. A few notes on the telephone. First landline, as I said, is not deductible. Now, what you may be able to deduct on Schedule C as either utilities or another expense on Schedule C, not the 8829, if you have an additional business phone line coming to your house, so you got a phone line that's for First line's coming in is for your security system. Second line is what you put in Yellow Pages, is what you use for your business. It's also on your business cards. That could be an additional, that would be a deduction. However, it is really not part of your home office. You would be able to deduct that extra phone line even if you didn't have a home office. So additional business line, let's say if you have additional dedicated fax line, in addition to your first line coming in, a business fax line would be deductible. Don't forget to deduct that on Schedule C. Long distance on the first line, so rare anymore with cell phones because you usually have an all-inclusive plan on your cell phone. But if you do have long distance on your home line and you can prove it's for business, that would be a deduction. And you actually can deduct all of that long distance if you have it. If you're someone that actually has that, it goes on Schedule C, not on the 8829. Now don't forget though, if you have Yellow Page advertising, which is also becoming quite rare for your phone line, I used to have it at my office. I used to actually get billed. It was actually part of my phone bill for the Yellow Pages ad. Some of them do that, some of them don't. Depends on who you're advertising with. Just don't forget that that goes as advertising, and it's even as for the first line, you can't deduct the phone line itself. However, you can deduct the advertising as advertising on your Schedule C. Just want to point that out. Just every deduction, they all add up. Okay, not 8829 utilities. These are not really home office. Your cell phone, percentage of business use of your cell phone, report on Schedule C. Your internet, even though it's coming into your house, even if you don't have a home office, you're probably using a portion of that internet for your business, doing research for your clients, using whatever. We all use the internet, communicating with your clients, sending emails, whatever it might be. A reasonable percentage of that internet can be deductible. It really doesn't go in the 8829 because the percentages are probably not the same. So, you know, you might only have 5% of your house or even 2% of your house being your home office, but you might be using 30% of your internet times you looking up listings or you know, communicating with clients or whatever it might be. So just remember that. Now let's move forward on to 8829. We're on line 21, other expenses. Now in this section here, this is really for common expenses that aren't reported elsewhere. And there's a couple of them that we run into and we don't want you to forget about. One of the major ones, if you have an HOA, the dues and assessments, you pay that HOA during the year. Some of you may be $100 a year. You might be paying $200 a month. Don't forget those. Those are actually deductible on 8829 as part of your home office expense. Also, many of you pay fire and ambulance fees. It's not really a tax. It's a separate bill. Don't forget that. Also, and don't forget utilities. I don't think I put it in there, but trash removal. Anything that benefits the entire house, and also you can relate to your home office, is deductible. Trash removal would go in this section here. It all goes, some would consider utility. Depends on how you argue that, but still it's deductible somewhere on that 8829, so don't forget about it. Okay, final notes here we want to make you aware of, and this is why it's important that, as we said in the last section, you use the same software every year. There is a carryover here. So if you have in a year where you don't have, if you have a loss, some of your expenses are not going to be carried over, and that is on line 24. I don't know if you can see that or not, but it's highlighted right here. That's your carryover from a prior year. Don't forget that. Make sure your software includes any expenses that was not deductible in a previous year. Make sure it carries those expenses over. It'll show up on your return. Make sure you put that into line 24. Make sure it shows up on line 24 from a previous year. And you'll see that on the return where they're showed at. So what you do is check the 8829, lines 42 and lines 43 on the previous year's return. Look for carryovers of those. If you have a professional doing your taxes and they haven't done it for a number of years, if you're switching professionals, if you're going to take my advice and you're getting tired of doing this yourself and you're going to find a professional, make sure you're giving them a copy of last year's 8829 form in case you had a carryover. If you're making money at the business, you may not be, but if you had a bad year, you had a loss last year, make sure you carry it over. If you use a simplified method in a prior year, you know, because you could switch this. It could have been 2 years ago. You may still have a carryover from a previous year that's just hanging there. So find the last year's return or the previous year's return for the 8829. Same if you use software. Just make sure you don't lose that deduction. Okay, well that's it for this section of the home office deduction, actual expenses. I think we only have one left, and that's going to be depreciating your house.